Am I right in this that you've forecasted 500 to 700K for Bitcoin sometime between 2025 and early 26?
Yes, it was 250 to a million, but I'll take 500 to 700. I'll take that. So I'll speak to Bitcoin. I would say this is the only asset you can own with no risk in the sense of counterparty risk. I think thinking you're late to Bitcoin is a failure of your ego. I really do, because it's late to who? Mm-hmm. And you realize, oh, you're comparing yourself to Anthony. You're comparing yourself to your friend, to your colleague, to this person you don't know on the internet. And to me, that's a failure of your ego.
Bitcoin's future is a hot topic, with some bold predictions suggesting the cryptocurrency could hit values between $500,000 and $700,000 by 2025 or early 2026. This forecast comes amidst concerns about a looming asset bubble driven by growing fiscal instability around the world. However, Bitcoin stands apart from traditional assets in crucial ways. Unlike stocks or bonds, no CEO, board, or government can interfere with or fail your investment. Bitcoin is decentralized, and once you own it, it's entirely in your control. In an interview, Jack Mallers revealed that while its volatility is undeniable, Bitcoin's unique nature makes it less risky than many other assets. The risk of counterparty failure simply doesn't apply. There's no need to trust any external entity. You own it outright, free from the uncertainty that can plague other forms of investment. Yet, many still feel they're too late to get in. This mindset, often driven by ego and insecurity, overlooks the fact that economic decisions are made daily at the margin. Bitcoin's potential for long-term growth remains strong, offering an opportunity for those who recognize its value. The market is still evolving, and there's still time to join in before the next big surge. Let's watch clips from Jack Mallers' explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I think fundamentally Bitcoin is designed to be a superior asset for you to hold. We can spend hours on this podcast talking about how and why that is. I think simply put, it's because it's the hardest asset you can hold. And hard is in reference to how hard is it to make more of it? How scarce is this thing? And Bitcoin is the scarcest thing you can own, period. And what do I mean by that? Well, Anthony, if everyone listening to this wants an iPhone, Apple can increase the supply of iPhones and get them one. If everyone in the world wants a McDonald's cheeseburger, McDonald's is going to find a way to get them a cheeseburger. Equivalently, if the price of gold goes up 10x and everyone is in demand for gold, Elon told us he's going to go to some other planet and get more. So the idea in financial markets is with more demand, you will find more supply. You always will. Now, Bitcoin is the only thing you can own where that's not true. With more demand, we cannot find more supply. No matter who you are, no matter where you are, no matter what you are, we can't make any more. And so it's for that reason that more demand has to find a higher price, because the more supply that's being demanded is coming from the market. It's coming from the existing holders. So if you want more Bitcoin, you got to bid it to a higher price. And it's the technology and the innovation and Satoshi Nakamoto's breakthrough that's built such a scarce thing. But fundamentally, why you would hold it versus other things is because it is harder, because it is scarcer, and because it will outperform and find a higher price for those fundamental reasons.
Am I right in this that you've forecasted 500 to 700K for Bitcoin sometime between 2025 and early 26?
Yes, it was 250 to a million, but I'll take 500 to 700. I'll take that.
Okay. Why? Take us through why.
I think we're going to see one of the greatest asset bubbles in human history. I think the fiscal situation is a problem. And, you know, I used to do media appearances and say that, and now I get the benefit of the Fed also thinks the fiscal situation is a problem. Our new administration thinks it's a problem. Every economist on CNBC thinks it's a problem. It's officially alert, danger. This can't last. Jamie Dimon. This is the first time I've agreed with Jamie Dimon on pretty much anything. So I think the problem is we have too much debt. And the way I would say it is that someone has to realize the loss, right? Domestic debt to GDP, close to 130%, global debt to GDP, well over 300%. And so there's a loss that has to be realized. And the question is, where are we going to realize that loss? Are we going to render all bondholders poor? Probably not. My expectation is further currency debasement. My expectation is further asset inflation. And my expectation is Bitcoin will continue to be the best performer because it's the scarcest and the hardest to make more of. In fact, it's the only thing you can't make any more of it. So the 250 to a million range it's a crazy buffer for me to say out loud. But the reality is, if America comes out and buys 4 million Bitcoin, I think Bitcoin ticks a million easily. If not, and we get interesting fiscal policy from this administration, well, then 250 seems decently reasonable. By the way, to the viewers, this isn't the new normal. The way this market operates is that it enters violent price discovery and then it falls. So I do expect a drop. I'm talking about what's the new all-time high, where will it tick? But I do think that we're in the early innings of a bull run, and there are many multiples to be made in 2025. I expect a weaker dollar and further debasement in assets. I think we will continue to see currency debasement, but I think Bitcoin is demonetizing other forms of wealth. So on the first one, are we in a dollar crisis that Bitcoin's at $100,000 today? I don't know. I went to Whole Foods yesterday and got a couple of ribeyes. The dollar was fine. The store wasn't on fire. I mean, clearly there's civil unrest. Clearly people don't like the level of inflation they've been forced to live through. But is the dollar collapsing? No. Do I think the dollar's going anywhere anytime soon? No. Mm-hmm. But historically, assets have been inflating. So I think we will continue to see currency debasement. On the Bitcoin demonetizing other assets and where it's winning value from what I would consider competitors, the reality is, people have been looking to store their wealth somehow, some way, if they can't in dollars. And that's not a controversial opinion. Nobody owns strictly dollars. If you can afford to, you own real estate portfolio, you own a stock portfolio, you own gold, you own something else that can appreciate in value over time. And so people have had to monetize real estate, equities, all these other things that aren't actually money in the first place. And so my expectation is that Bitcoin will continue to win over the demonetization of those assets. So instead of owning 10 homes where you only consume one, you own one home and the 9 you sell and you buy Bitcoin, because Bitcoin performs better as a money and performs better as a store of value and performs better in percentage terms and in real terms against the dollar or whatever your unit of measurement is. So I think it's a combination of both. And
Jack Mallers passionately argues that Bitcoin is the ultimate asset due to its scarcity. Unlike iPhones or gold, Bitcoin's supply is fixed and can't be manipulated. He predicts Bitcoin could soar to $500,000 to $700,000 by 2025, driven by the global debt crisis and currency debasement. While volatile, Bitcoin's decentralization makes it the safest asset, free from the risks of CEOs or governments. As traditional assets lose value, Bitcoin will continue to outperform, securing its future as the premier store of wealth. Jack Mallers highlights that Bitcoin's scarcity makes it the ideal asset for storing wealth. Unlike consumer goods, Bitcoin isn't meant for consumption, but for future exchange, offering unmatched security. It's the only asset that can't be reproduced, making it a superior store of value compared to real estate or gold. Mallers believes Bitcoin's value will soar as global currency devaluation continues. He advises people to set aside their ego and embrace Bitcoin, focusing on its long-term potential rather than short-term price fluctuations. Let's watch more clips from the interview.
I think this is a good opportunity to walk the users through, what is money and its intended purpose in a marketplace. So money is a market good, just like anything else, just like a cheeseburger or a car or a plane. But the difference is I acquire a cheeseburger to consume it and eat it. I acquire a car to consume it and move me on the road. I acquire a plane to consume it and fly me somewhere. I acquire money uniquely not to consume it. It's the one market good that I don't consume. I'm acquiring the money to save and exchange it later for the things I need. And so money performs that job as a technology. So when people say money is whatever we think it should be, like what we can make water bottles money if we want to, it's like, no, but you can't make a water bottle an airplane if you want to. If you get on a water bottle and jump off your roof, you're going to get injured. It's a technology just like all other technologies. It has a job to do in the market. And when you understand that job, you realize you don't have to store your wealth in real estate or in equities. The job is to store and save the wealth you've created and then somehow exchange it for what you need in the future. And Bitcoin fundamentally is better at that job. And it is the technology purpose built to fill that role within the marketplace than everything else. My house was built for someone to live in it, not for me to be able to save and exchange later. Equities was built to run a company, not to be a money, right? So I think people will sell the assets that they're using as money because of the unfortunate situation of a devaluing currency and convert it into Bitcoin, which Satoshi built to solve that problem of a market good that you don't consume and you save it and use it for future exchange. I'd make the argument that we kind of already have CBDCs and they coexist today. The dollar that I use is fairly digital. I don't hold any paper dollars, to be honest. I don't hold any cash. And the difference between the existing financial system and CBDCs, for the point of this question and answer, is small and not too meaningful. The real difference is that they can make as many CBDC dollars or existing US dollars as they'd like. They can continue to debase the currency. They can continue to inflate the goods and services you need around you. Whereas to Bitcoin, it's the opposite. No one can make any more. So the only thing that can compete with Bitcoin is an extremely hard asset that's infinitely as divisible, that's as easy to teleport all over the world, that you can validate from a cheap hardware device in your home. So I would say it's not a competitor at all. And in fact, it's just the same dollar that we've had or fiat currencies we've had dressed up in a new outfit. I think the opposite, we may be seeing that play out in the US. This is going to sound cheesy, but the reality in my career is you're better off on Bitcoin's team than fighting against it. And that's a lot of the game theory that's been designed within the system. But by joining Bitcoin, in many ways, for folks like Michael Saylor or the US government, it's a self-fulfilling prophecy. You joining the network, you immediately gain existing benefits, and the new additions that you add push it to new heights versus trying to ban something you can't ban, trying to control something you can't control, trying to stop something that's using superior technology. So the game theory is such that you can spend your life failing trying to fight it, or you can change your life just getting on its team. So I think what we'll see is people that find benefit in Bitcoin, and there's various different ways you can, and actually joining the network as opposed to trying to fight it, because no one's been successful and you're incentivized to rather just gain the benefits instead. I don't want to excuse the volatility, and I don't want to set unrealistic expectations. It can be volatile, but risk meaning I'm not trusting anyone else. There's no corporate CEO that can fail a product launch. There's no board member that can get hit by a bus and get in a disaster. There's no government that can change the regulatory this and that. Like, I own it physically bare. It's mine. I have no counterparty risk. And so to me, it's actually the least risky thing I own. For my house, I have property taxes. I have an HOA. There's a building and a staff. What if there's a natural disaster here in Chicago? I have counterparty risks there. For my company, I have employees. What if an employee leaks secret information? What if someone tweets from our account that it violates terms of service? There's risk involved there. For my Bitcoins, they sit physically on a hardware device, and I don't have to trust anyone, and there's no counterparty risk for me. So I would look at Bitcoin as the least risky. Where there is risk is don't invest more than you can afford to be volatile. I think thinking you're late to Bitcoin is a failure of your ego. I really do, because it's late to who? Mm-hmm. And you realize, oh, you're comparing yourself to Anthony. You're comparing yourself to your friend, to your colleague, to this person you don't know on the internet. And to me, that's a failure of your ego. That's vulnerable insecurities getting the best of your best interests. The reality is economic decisions are made at the margin. Every single day we wake up and we contribute value to this world. Our alarm goes off and it might be cold, we might be tired, commute might be long, but we get up and we do it anyway. And we make the world a better place through whatever our contributions are. Janitor, podcast host, investor, we contribute to those around us. We got to store that value somewhere. for ourselves, for our future, for our family. And you have to make that decision. And every single day, I make that decision, and that decision continues to be Bitcoin, no matter the price. The price doesn't invalidate the properties of the system, the fact that it's the scarcest, the fact that it's the best. And so thinking you're late, to me, is a failure of ego and making yourself so small that you can't act in your own best interest when compared to another shadow or another person. So I think you got to put your ego aside. And when you submit your ego and say, I'm not bigger than this thing, I don't need to be the main character, I don't need to be the best, I just need to be me and do what's in my interest, that's when I think you start buying a little bit of Bitcoin, and it's time in the market, not timing the market. So don't let your ego get the best of you. And to me, Bitcoin's continually the best place to put my time and energy, my effort, my labor. And I would suggest others take a look at the same.
Jack Mallers' perspective on Bitcoin's potential future aligns closely with the predictions made by crypto experts, such as those from Blockware, about Bitcoin's trajectory. Blockware has forecasted a significant range for Bitcoin's price by 2025, with the possibility of it reaching anywhere between $150,000 and $400,000, depending on factors like Federal Reserve policies and corporate adoption. Mallers argues that Bitcoin is the ideal asset because of its scarcity. Unlike other assets that can be produced in response to demand, Bitcoin is the most scarce asset, and its fixed supply ensures it holds value better than real estate, gold, or equities, which were never designed to be money. This scarcity, combined with the current fiscal situation characterized by increasing global debt, positions Bitcoin as a hedge against inflation and currency debasement. Mallers emphasizes that, unlike traditional assets, Bitcoin's properties are immutable. There's no corporate CEO or government that can devalue or alter its supply. This view ties directly into the broader discussion about Bitcoin's future, as it demonstrates why Bitcoin could outperform other assets if global economies continue to devalue their currencies. Mallers stresses that the current fiscal environment, combined with Bitcoin's ability to operate outside traditional systems, makes it an invaluable store of wealth, and he's not alone in thinking that it's just the beginning of Bitcoin's value. As we wrap up, do you believe that Bitcoin is less risky than other assets despite its volatility? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.